Today's number is 11 billion because what we've just witnessed in markets is truly historic. When it comes to crypto, we've never witnessed more Bitcoin liquidations in less than 24 hours. In stocks, one of the biggest sells of the last 2 years. And of course, in commodities, massive squeezes across the board. So is everyone losing faith in the systems? Well, that and more is coming up in today's show as we take a look at what to watch next and more importantly, the data surrounding the current market conditions. Guys, we've got a lot to talk about. Let's go through stocks, commodities, and cryptos right now together. See you soon. Well, welcome back everybody to The Daily Show. It's great to have you here. And if it's your first time, make sure to subscribe and smash that like button if you love markets like we do. We'll be covering the latest macro, the data, and of course the dark pool liquidity from Wall Street. Before we get into all of that though, just a quick announcement here. We are coming to Brisbane for a free trading event Wednesday, 12th of November. If you can attend it live, make sure to do so. Links in the description down below. We'll be going over our next 12 months, including what's going on with metals and where we see things. And of course, talking about the potential here of a historic run in both directions. Will there be euphoria into a bust? We'll be discussing all of that and more. So if you can attend the event, make sure to do so. Links in the description down below. Now let's kick things off here with the crazy calls that are starting to come through. So obviously we've seen so many things happen over the last couple of days, including historic liquidations on Bitcoin that we've got coming up. But now we're seeing articles come through claiming that silver's going to get to $100, gold's going to get to $10,000, Bitcoin's going to hit 2 million, $3 million, all these types of things. And this is usually a sign of euphoria continuing on those markets. And things can get wilder than most people can imagine, even near the end here. But what is this telling us? Well, it's telling us that currently we're in a bit of a squeeze. And in fact, silver has been historic in what it's been doing over the last couple of weeks. It's even surprising me. And you guys would know that we've been a very big silver bull. And we actually continue to be a silver bull up to maybe not $100, but certainly some big key levels coming forward. Now, let's talk about why this is. We'll take a look here at the inflows into GLD. Now, this is, of course, one of the biggest exchange-traded funds for gold, and it just posted $12.5 billion in volume just on Thursday last week. That's the second highest ever on record. So people are really clamoring for gold, and so are central banks, as it turns out. Now, this has been one of our thesis reasons. Of course, there are many others. Our advanced course in particular goes through why this is a repeatable cycle, and there are reasons why we like gold, silver, and some of the other precious metals into what is happening right now in markets. But take a look here at foreign central banks. For the first time in decades, there are now more purchases of gold going on and holdings than US treasuries. And of course, this has a lot of people worried about what's in store next for particularly the US dollar. A lot of people are saying it's debasement, the US dollar is done, all of these types of things. I'm not on that camp, but what I am on the camp of is, of course, recognizing when things are slightly undervalued, if not historically undervalued. Now, Tavi Costa, as you guys know, is a big bull on metals like me. And one of the things here is he's kind of going with the idea that silver is undervalued versus US equities. Well, in fact, all commodities and metals are probably valued very similarly to this. They've been in slumps for a very long time. But could it be a point here where silver actually breaks out and gets back to some insane ratios? Well, it's certainly possible. I tend not to believe it's going to hit like this. But what I do think is there could be a little bit more on silver. And remember, we're kind of looking for that $70 to $80 target when it comes to the next couple of years. And it's more to do with just the fact that we've now broken those all-time highs. And what that usually means is there's going to be volatility on the horizon, opportunity, but those ratios, especially to gold, because that's really the ratio we should be looking at the most, are still quite low. So that means silver's still cheap in compared to gold. And so are some other metals, palladium and platinum for certain in terms of when you're looking at them on the charts. And we've got some of those a little bit later on. Now, let's have a look at the dollar decline. Of course, everybody's talking about how the US dollar is done, it's finished, it's all these types of things. Well, it's not so soon. You know, yes, we might be in a currency war in the world between BRICS, SWIFT, and all of those types of systems. But at the same time, you can see here that if we look at the year to date, sure, it's down. And actually, I do think that in the future, it'll be down more by design more than anything else. And of course, if you put it in context, you've got to remember, where was the dollar during the dot-com boom? Where did it bust to? And where is it now? So is it really that historically weak? No, not in the terms of the world. And of course, you've got to keep that in mind when you're looking at it. Look, there is a few things that we know about the dollar. One of them is, of course, if you hold fiat currency forever, never invest it, you will be behind big time in the world. But at the same time, sometimes cash will be king. And I often find that cash and those types of things are good when everybody hates them. So maybe soon everybody will hate it even more. And then I can start talking about how I love fiat currency. But at the moment, of course, it's about some of the other ones, which is those metals and even Bitcoin itself. Now, what we just witnessed, guys, was historic. I mean, historic. This is wild. $11 billion of open interest was gone in less than 24 hours. And you can actually see this by this Glassnode chart here, really showing us, wow, what a liquidation. And it's taken us all the way back, gotten rid of all the froth here in the markets and a lot of what we kind of expected to get hit at some point. Remember, we were just discussing the other day, in fact, in our private community as well, links in the description down below, that we thought it was too easy. And whenever you think things are too easy and you think things are just glorious and it's fantastic, it's what I call Superman syndrome. And it means that everybody thinks that they're suddenly the greatest trader, the greatest investor. You guys know in the comments down below, I'm sure you've seen this before. And that's what was happening in the cryptoverse again, where everyone was just like, buy the dip, it's all fantastic. And look, it doesn't change my thesis too much on Bitcoin. I still think Bitcoin's the best crypto. I still think Bitcoin will go to an all-time high, and we'll see it in a moment. But this is the type of event that gets the big whales out, and they love it because, of course, it provides liquidity and it provides cheaper price. Now, Blue Curtic put something here together which says if Bitcoin hits an all-time high after a 25% plus drawdown in the same year, then usually we saw further drawdowns, but it always ended positive. So you can kind of see here the way that the markets are looking, it still looks positive for Bitcoin into the end of the year. And that's important when you consider particularly November and December and January. Remember, if we're in a similar halving cycle to what we've seen in the past, it's kind of normal to see a lot of volatility around the August into October point for Bitcoin and for the cryptos. And then often it comes back into November. And then somewhere around November into December, we see the peak or the beginning of alts. And alt season doesn't last for long. But there are some encouraging signs, and I'll tell you why it might have been close to the low, if not the low, for Bitcoin for now. And the first reason is because we saw all these dark pools come in. Now, this was all before, as you can see here by the date, all way before the announcements came through. We saw that large dark pool. We reported on it on the channel. And we've just seen what I think is a partial close, if not, close to a full close of the position. So that is that the short, the large dark pool short that was on Bitcoin has now been removed. Now, I'm sure they would have rather get it out over here, but they probably weren't given the opportunity due to maybe timing and also the fact that the markets have obviously closed into that weekend. Now, why is this important? Well, it does signify potentially a turning point. We're obviously looking for more dark pools, but it also could bring us that style double bottom pattern that we often see with Bitcoin and with crypto, where the initial shock is significant, creates a massive liquidity wick. I wouldn't be looking at Binance charts, I'll tell you that much. Those liquidity wicks they're wild, some of those on some of the alts that I've seen. But at the same time, you are looking generally for stabilization. Now, if we go over to the market, so of course we know that metals are doing really well. People are losing faith clearly in the system in some ways and also losing faith in all sorts of things. They're going to the safe havens, the traditional ones, gold, silver, precious metals. There's so many reasons to like those right now. But US stock valuations have also hit an all-time high. Now, I do like this chart. We've shared it before. And one of the things that people are getting concerned about is rightfully so, that we are at levels when you take everything into consideration, all these different ways of working out kind of values to time, that we haven't seen except for in the absolute peaks of markets that then go into even potentially lost decades. Ooh, that's not a good word to hear about. The lost decade, could it be coming? Well, let's hope it's not right now. And the good news is it doesn't seem to be right now. Now, why is that? Well, average performance of the S&P 500 the week after a 2% one-day decline is pretty good. Now, this one here comes from Gonjan over on, it's Gonjan JS over on X. And it's, as she says here, that the S&P 500 has rebounded around 2.3% the week after a one-day drop of 2%. That's the biggest jump since 2019 and the second largest since 1983. And you can see here that actually the odds of gaining, then stabilizing are pretty high. And we've already shared plenty of stats going through quite a few things, including the fact that even if the market did drop further, which I would still like to see it go down to at least the weekly 20 moving average, which we've got later on today's show, that traditionally it's probably going to be bought up just due to the mass euphoria, mass FOMO that is in this market, and a lot of money still on the side that missed out on that Liberation Day buy. And you can see here another good chart here, the VIX 200-day versus 20-day. So that is that if we kind of see these aggressive spikes, but we don't see more of a kind of like slower decline, or in this case, a big VIX spike that actually pushes the moving averages across each other, that we don't usually go into sustained sells. So this is a really cool one. It's VIX 200-day minus the 20-day moving average. And you can see that when these cross, that often brings the bigger pain. So really interesting one here. It kind of suggests again that at worst we're looking at more likely the kind of garden variety style pullback if it does get worse, which is between 5 and 8%. And there are some charts that say that's all the dip we're going to get and it's just going to keep ripping. And do remember, if the market goes on to make a new high, that is going to cause further squeezes. And that's the kind of thing we're seeing here in silver. Now, what about CTAs? Well, we do look at these. These are commodity trade advisors. We know they're momentum-based funds. Daily Chart Book here has put together a pretty cool chart from Goldman Sachs. And what that shows us is that we do have kind of a sell in every occasion coming through here on CTAs. Now, that's pretty rare. In fact, over the next week, it's expected that even if the tape, so of course the price is flat, they're going to sell. If it's up, they're going to sell. If it's down, they're going to sell more. So if the market does start to fall off, in fact, it's actually almost like a negative gamma event that could come in here. You can see the down tape style scenarios are looking pretty nasty if we do see selling. So I think the key here is that if we lose key levels based on options that we'll look at soon on this channel, that the thing is that if that happens, we're going to probably enter into a negative gamma event. And that can create a little bit of cascade, or what I call waterfall selling. According to Bank of America, it's kind of similar, although there's a little bit more positive CTA triggering. But again, the negatives kind of do outweigh the positives. And you can see here the bear, bull, and long unwind scenarios. So again, watch the levels. Here are some of the big key zones that they believe is going to trigger. And I just want to focus here on ES for a second. It's about 6,600 to 65.50, okay, is the first one. And that's going to come in a lot of handy when we have a look at the options levels in a moment. Rolling 1 month estimated retail demands. Why did we sell? Why did we see all of this, mass liquidation, quick sell-off? We've seen kind of tariffs on, tariffs off before. Well, it's because everyone was euphoric. We already knew this. We looked at it in this particular chart before it happened. We also saw it in this chart, which is obviously stock correlation. We also saw it in sentiment reports. Retail traders just getting a little bit too feisty with the leverage. And when that happens, of course, liquidations can occur. The other good news in the markets right now is that when we hit intraday highs, when we tend to be at all-time highs, and then we dip like this, while it could be getting closer to the end, as you can see here in 2000, it's generally not tomorrow. It's not the next day. It's not even the next couple of months. It's all part, remember, of the structure that we're seeing post-Fed cut. And this is going to be the big important factor. What's leading post-Fed rate cut, and what are we actually starting to see in terms of structure on the markets? Same thing here from Subu. When we get these 2.5%, 3% kind of shock days, take a look at 1 month later, take a look at 6 months, 9 months later. I don't think it's time to panic yet on markets, and I think that's very important to note. And it's the same news here when we have a look at Wayne's latest data here as well, taking a look at how the markets generally trade around these particular days. So the next question is, of course, what's going to happen next? Well, let's have a look here at the US 500 and how it traded through a bit of a lighter session. We did end up getting a gap up. We ended up getting it holding within a very tight range. And as you'll see in the futures, because I think the futures probably do it better, you might look at this chart and think it's that meme where everybody has like too much stuff on their charts. But what I found really interesting is off the last pull up, we hit a 61.8 fib. And then off the sell off into the rally, we hit a 61.8 fib. Now, if you pause the video here, what other thing do you think I'm looking at here that I always talk about that's pretty important? Yeah, it'll give you 10 seconds on it, yeah? Well, one of those is, of course, pretty much the most used indicator whenever I read reports, and that is, of course, the moving averages and the 20 daily moving average. What has held the market up every rally pretty much so far has been dropped underneath, and then it comes up and it can act as dynamic resistance. So it's very important to be looking at smaller time frame action in here. We don't have evidence either way. Of course, if you're a longer term buyer, weeks into months into maybe quarters, you're probably not going to be too scared about this at the moment. Even if it goes cheaper, then probably an opportunity in many ways. But when you're looking at the futures market action, I think this 6,600 kind of keeps popping up to me. And you'll remember back to that CTA chart that this comes in focus. And the reason is because if we drop this level, there's more likelihood we go down and we create maybe a double bottom base here or even go a little bit weaker. So this is definitely going to be a key level. And I'll explain it why when we look at these options. Yep, the puts are back. Have a look at these. Everyone went bearish, guys. No surprises, yeah? There are puts everywhere over the next session. And they all kind of pretty much culminate in 6,600. So if we go to the next session, which is the 15th, you can see here heaps of people trying to short. And traditionally so far, what's this done? It's driven markets higher because markets just said, you know what, we'll find that support, we keep buying up. But if we do lose 6,600, because it makes a lot of sense on the chart as well, that could actually create what we call a negative gamma or cascade effect. So it's going to be important to look at that. In terms of if you're looking for buys, probably a high close, like a movement high on the previous session will start to, squeeze up as well, because of course that's going to move more into those positive call sides. But I think 66 is clearly a big watch zone of the next 24 hours. Tesla time 435, it holds again. So it holds the 400, 420, 430 zone. And again, 450 is the main issue for Tesla. Remember, Tesla can do whatever it wants. It does strange things while the rest of the market is potentially struggling. But I think it was recovery across the board. Nvidia, we're bullish on at the moment, obviously to that 200 target plus, and it's doing it again. It rebounded really strongly. So again, even in the face of all this stuff, it just goes through. What about IBIT? Well, IBIT's an interesting one because, of course, we saw the overall puts start to rise up on Bitcoin. We saw liquidations. To me, the way the Bitcoin market, the way the crypto market liquidated is kind of the thing that usually would give me a bit of bullishness in terms of the market. It's not that it can't come back down to the same levels. So we could go to 60 on IBIT and obviously push down to that support again. But the liquidation amount usually means that the markets start to find the bigger buyers. The whales come in, they start to pick up. And unfortunately, who loses in the end? Often it's us, the retail traders, because we don't often have the risk management conditions that these guys do have. On gold, it's just been stellar. I mean, gold is beating my expectations this year, and I was a massive bull. So, how well is it doing? Better than even I expected. I still think there's going to be a massive level of vol soon, but you know what? I've thought that might happen for a couple of $100 an ounce here. And it just keeps pushing and pushing and pushing. And you can see here, based on the options, it's in mega positive gamma. So this is in a squeeze. Silver's in a squeeze. These markets are doing very, very nicely. Now, we didn't get the bonds market open yesterday, so it'll be interesting to see how we update with bonds risk. We don't know that yet. So, of course, that is the X factor that could get the market down a little bit first, which I think is probably what I'm thinking will happen. It'll probably pull back a little bit, but we'll watch that for the next video. As we kick off, of course, earnings season. I don't know why I don't have the charts here for earnings season. They're in our last video. I did have them, but I forgot to put them in. But just remember, the banks are kicking off. So I think all you guys know how to find an earnings calendar. The main thing here is the banks. Have we seen debt expansion? Have we seen record profits? I would think yes. The question is, does the market say it's a buy the kind of fact, or was it a buy the rumor? And this is more of an excuse. Oh, we're concerned about profits in the future. We're concerned about all these types of things. The thing about earnings season is it can often bring these types of volatility events, which are, by the way, usually an excuse. Okay. So again, is it an excuse? Is it something we need to be worried about? Or is it a real problem on the horizon? And these things are very important to note. The volatility markets, it didn't get above 25, so it's not really time to think of anything in particular there. For palladium, for platinum, for those kind of metals, I actually have a chart here that I want to show you. And what this is it's platinum versus gold and silver. And you can see here that silver is now just, it's a thing of beauty, guys. I can't believe how much it's up. But anyway, it's up a lot. Very nice. Gold is up a lot. But look at platinum. Poor platinum. It sucks. So why is this important? Well, palladium and platinum are also precious metals. And while they don't have the currency-like properties, they're still important. And these ones have been moving better. So I actually quite like them on the charts. They still look fairly cheap in comparison to history. And of course, when you go through history, you can see here that things like 2200 is not outlandish for palladium. So what do you guys think? It looks like to me that they're still relatively cheap, kind of like where silver was earlier this year compared to gold. And those ratios are starting to look a little bit better. What about US dollar? Well, US dollar has rallied and we kind of still think it looks stronger than weaker. 99.80 is, of course, a goal. And actually, currency trading has been some of the better trading of the last week in terms of stable trading. And gold just squeezes. I mean, this thing's about to hit the 4,200 range. 41.54. It's just hit every 4-hour, 20 moving average. Bang, 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 the whole way up. Higher highs, higher lows. No reason to say it's done yet. And it just keeps moving. So it's strong. Do not short it, in my opinion, guys. I mean, obviously, it's my opinion, not yours. But look at this squeeze in silver as well. Wow. And I just want to put this in context. This is getting a little worrying for me. And it's not because, I don't love silver. I do. And I still think it's up. But it's getting outlandish. Is that outlandish candles? $100 random article. Everyone trending it suddenly on X. Not a good thing. That's a big, big outlier candle. I don't like it when it does that. To me, it smells of risk on the future in the future. And I think while you ride these things and you say glory, these things could go to who knows, unbelievable amounts of money. You've got to be warned. This thing is starting to get up there. And on the monthly, it's almost hitting overbought, like significantly overbought. I mean, not just, normal overbought. US oil, nothing to note, 63 plus close. Otherwise, it's not really going to be doing too much. We are looking for that. We'll see whether it happens. And semiconductors, again, rallied up. Just chilling for now. Nice move. Obviously, it's been a big rally. It doesn't really look particularly weak or strong. In the China market, you may have been lucky enough to get a pretty good level. In fact, 25K, I think, was pretty sweet when it came to good support, good trade level, good zone. That's a buy the dip style scenario. It's really not a great TA from the perspective of knowing that there's going to be a change there, but it certainly is a cool level. At the moment, of course, it's weakening on the news, and we'll see how that all eventuates. NASDAQ looks like semiconductors, big surprise. And then, of course, Russell is doing pretty similar things to the S&P. When it comes to Bitcoin, though, I think this was probably one of the more surprising ones just because the liquidations were so significant. Now, if you load up, I think it's a Binance chart. The thing's down here somewhere. It lost a lot. But this is an excellent level, this 100K. Obviously, I am still bullish on Bitcoin because I think that there's more to be done on the tokenization side before this is all done. Texas Stock Exchange coming up, all these other things that could get this whole party started again. So what crypto has done in the past often is it's kind of dipped. It's sometimes whipped a low. It's sometimes 61.8 returned and then bounced. I'm going to be looking for those types of things at this stage, but it is a little bit of guessing. Where's the best price? If you were managing to get down here, I don't think it's too bad. And of course, I do still expect that there could be a new high. Now, some people will say, well, it's a Wyckoff distribution. I think that's to be proven. We do not know that at this point. So obviously keep looking. And when we have a look here at Ethereum, this was a sick level. And I saw a lot of these. It didn't matter whether it was Solana, Ethereum, or others. I think they all kind of hit some pretty nice zones. And Ethereum here hit 3,500. Saw a strong bounce. It's still in consolidation. So while, it's not great what happened for sure, you've got to look at this from the perspective of, are we still in the halving cycle style? And this is the kind of thing that happened in the past as well. Liquidations occur, and then they have an excuse for why it happened. And the thing about crypto is it always reminds you. A long time ago, we were live streaming back in the 2021, I think, period where it crashed. And I remember the alts, and I still remember live streaming. I was like, whoa. And I was on the camera, and I was, I was like, whoa, that is crazy. And it was like DOT or something. It went from like $45 to like $16 or something in a few seconds. A few of you will remember it. And that was just pure liquidation. Everything closed, everything crushed. It happens. And that is the nature of the beast. So always be careful when you're in these crypto markets. Guys, to summarize, I think it is a market that could potentially come down a little bit lower. I still think it will be garden variety style selling if it does occur for now with the evidence that we have. And of course, we'll change if the evidence is required. But the big thing here is that, remember, this current problem, like a click of a finger, we could get rid of at least that one. It doesn't change the underlying issues. And do remember, they're being exacerbated by all of this on-off stuff, debt, all sorts of things. Earnings season may bring us some volatility as well. If you're interested, again, to check out our thoughts on the next 12 months, check out the Brisbane trading event. Make sure to get there live if you can. It's going to be awesome to meet you guys again. And it's always a great event. And of course, check us out on X, check me out on LinkedIn, all these good things. Guys, thank you so much for watching. The markets are always evolving, and so do we. Bye for now.